Hey, what's up, everybody? This video is a shortened segment from a longer, about 1 hour video. Now, Seth Russ is a financial planner out of North Carolina. He works with people across all states, though. But he invited me onto his platform to talk about some tax topics. And what I did was I took that and I broke each topic down into its own video. So that's what this is. This is one of those. There's other videos about different topics from this same interview. And I've also posted the full 1 hour video, but most people don't like to sit down for an hour. So that's why I broke it up into these smaller segments. So that's what this is. Enjoy this. I'm going to let Seth do his own introduction in the video, but I hope that you enjoy and I hope this helps bring you peace of mind.
I am Seth Russ. I'm a financial planner here in North Carolina, serving people in all 50 states, though. And my goal through serving people with finances is to help them blend their faith and their money. What are some common mistakes you see people making with their taxes and finances in general? So, what's like probably 3 to 5 mistakes you see people making?
Yeah. Yeah. Well, I listed a few more than 3 to 5. We'll go through these quick though. All right. Number one is keeping poor records.
Yeah.
I mean, people don't think about this at all. They have horrible accounting records, especially on the business side. I mean, even on the personal side too. You don't keep receipts, for charitable giving. Then if you get audited, that gets thrown out. Now, okay, likelihood of audit's pretty low. But on the business side, you got poor records. You're not keeping track of everything in QuickBooks or some sort of accounting software. And, you end up not deducting everything you could have. Or you deduct more than you should have, then you get audited. Now you owe penalties and interest. So record keeping is by far number one, your best tax saving strategy is to have good records. Number two, do it themselves, right? So they do it themselves. They mess it up. Now I think you've got another question later on this one, so we're going to circle back to doing it yourself. But yeah, you do it yourself, and you miss something. You weren't aware of something. You don't categorize something correctly, and you're going to mess it up. Using unqualified professionals. Now, this is another one I think we're going to circle back to. So I won't go too much into this, but you use somebody who just doesn't know what they're doing. Now, the biggest risk here is you use somebody who commits fraud. Now, when I was in New Bern, I never saw fraud. I mean, I pretty much, I knew every CPA in town, at least by name. And, even if I hadn't met him. So I never saw fraud when I was in New Bern. I moved to Orlando and I get these returns and it's like, hey, you're making $70,000 and you've got $40,000 of charitable contributions on Schedule A. And they're like, I didn't tell them that I gave any charitable contributions. Meanwhile, the Schedule A is not even in the PDF packet that the preparer gave to him. And I'm like, well, where'd you find this guy? Oh, he works at the car lot with me. He's a used car salesman and he does taxes on the side. And I'm like, oh, okay. Maybe not the best place. Now, he could be legitimate. He could know what he's doing, right? Like that's the hard part. And that's why we're going to circle back to how do you find a good
Mhm.
professional? We're going to circle back to that. But yeah, that's one, fraud or just mistakes because a professional doesn't know what they're doing. The next mistake people make is they listen to social media advice. And I'm going to go ahead and say that includes this video.
Yes.
Do not listen to this video without talking to somebody about your specific
Yes.
situation. Because everything we said may or may not apply to you, and somebody's got to figure out if it applies to you or not.
Yep.
Um, so this goes too with neighbor, barber, guy at church. Like I don't care. Whoever's giving you tax advice, make sure they're now. I kind of if I'm your neighbor, okay, you can listen to me,
Yeah.
but not if you don't give me the specifics, right? I'm
Yep.
going to tell you, don't even listen to me if you don't give me specific. I need to know the specifics. So yeah, watch the YouTube videos, bring that up to someone who can tell you if it applies or not. I have no problem with people telling me they saw this on YouTube or TikTok. I'm going to help them understand if it does or doesn't apply to them and why. Because I
Hmm.
want them not just to know like, oh, my neighbor's doing it. How come I'm the idiot not doing it? No, I want you to know that you're the smart one. And this is why you're not doing it. And this is why your neighbor probably shouldn't be doing it. So go back and tell them to reach out to a professional. Because I want you to understand why you are and aren't doing things and to be comfortable and confident in what you're doing. Uh, LLCs do not give you any tax benefit
Yes.
whatsoever. By
Thank you.
default, they have specific tax statuses. The LLC creation does nothing for you. It's a legal protection thing. Talk to your attorney about it. Now, it's the first step potentially in making an S Corp election, which can save you some taxes. Again, if the situation fits, got to figure that out. Home office rules, people mess those things up. Your home office has to be exclusively used for the business. If it's a guest bedroom and your mom stays in it one night out of the year, there's a tax court case that says it's not exclusive. Doesn't have to be a whole room, though. It can be a section of that guest bedroom that's exclusive. And also, the home office, most of the time, is not a great benefit anyway. So it's like, why risk it? Now, it can be, but you need to talk about the specifics there too. Vehicle rules. People think, if they buy a vehicle, they don't have to track the mileage if it's 100% business, but still got to track the mileage. Got to have a log. If you don't have a log, it's one of those things where once the IRS shows up, it's too late to create the log. They will not let you go back and create this after the fact. Got to keep it the whole time. The Augusta rules. I can rent my house. My business can rent my house from me. Okay, well, I had one. The guy was doing 14 days a year. I don't even know if he was really doing it, but 14 days is the max. So the agreement said 14 days, and it was $30,000 in rent. And I'm like, no, this reasonable is always a key word here. And it's like, well, the going rate for what you're doing might be $250 a day times 14. That's what you can do. If you're not using your house like an Airbnb, if it's used for meetings, you got to compare it to meeting space. Now, if people come in and sleep there and you're using it like an Airbnb, then you can compare it with Airbnb rates. But you got to keep minutes from the meetings. You got to literally, actually, legitimately use it for business purpose, have the meetings, keep the records. Then this can be a good rule. The other way you can do it is just put your house on Airbnb for 14 days or less. I know somebody, they're near a college town, football season. They make about 10 grand, 100% tax free because they rent it out on Airbnb for less than 14 days. Same rule. You don't get to deduct anything, but you don't have to report the incomes. 100% tax free income. S corporation status, choosing S corporation too soon. You've got to have a big enough gap between what your reasonable comp needs to be and what you're actually bringing in of taxable net profit to make the savings worthwhile. People elect the S corp status, they're not actually saving anything, and all they're doing is they're spending extra fees and payroll and new tax return. The other piece of that is unreasonable comp. I'm a full-time financial planner, and I'm paying myself $24,000 a year. Where in the right mind is a full-time financial planner going to be making $24,000 a year? The other one I see, actually, I didn't even think about this one, but I had a guy, CFP working for, like an Edward Jones or something like that, right? But he was a 1099. Edward Jones, I don't think you're 1099, but he was with another place. He was a 1099. But the problem is the licensing is in his name. The contract with this, forget the name of it. It wasn't, I was going to say Edward Jones, but it wasn't Edward Jones. But with the entity is in his name. So what happens is they get a 1099 in their name. They get a tax professional who puts it on the return, backs it back out, and then puts it on the S corp return. Court case, Flesher. I don't forget how to spell it, but you can't do that. You can't assign income from yourself to another entity. People are doing it all day long. If they get caught, they're going to have to pay all the taxes and penalties. Can't do that either. Not knowing your entity type. I mean, clients come in all the time. I don't know what I am. Like, I think I set up an LLC. Have you made an S corp election? I don't know. What's that? Partnerships by accident. Me and my buddy are doing a business together. Okay, how do you report the income? He puts half of it on his return. I put half of it on my return. You have a partnership. We didn't set up a partnership. Defined in tax code, if you have more than one business, you have more than one person participating in that business. Now, real estate rentals, you can get away with this in certain situations, but you're in business with someone else. You've got a general partnership, whether you've got an agreement or not. You got to file a partnership tax return. I see that one a lot too. Messing up your accounting on the clergy side, they fail to pay self-employment tax, usually on their minister's housing allowance. They fail to report the right amount as minister's housing allowance or exclude the right amount because they don't understand those rules. And then failing to have a basic understanding and just look through your own tax return, right? Mm-hmm. So how many of those fraudulent ones, right? Now, that one client that I picked up, the Schedule A was not in there. Now, had the Schedule A been in there and they did a quick glance through it, they'd have been like, charitable contributions, $40,000. That ain't right. There was another one I had. If he had just glanced through the tax return, Schedule C, income and expenses, $40,000. He's a real estate agent making $80,000 from a 1099 with $40,000 of office expenses. He'd be like, that's not right. I mean, there's things that you can see that are off, and you can just kind of, have a base. You don't have to know it well enough to do it yourself. Well, you need to look through that thing because when you sign the return, you're on the hook whether you have someone else prepared or not. And that's my last point. Realizing that you are still on the hook, even if you hire someone else out. As soon as you sign it, you take responsibility for everything in that tax return. And if there's a wrong number in there, unless the preparer committed fraud, they're not getting in trouble for anything because they can rely on what you provide them as long as it seems reasonable. Yeah. And even if there is fraud, okay, they're going to get in trouble for that. You're still going to have to pay the tax. You're not going to get out of the tax just because they committed fraud. You're still going to have to pay the tax that you would have owed anyway. So those are the things that I see way more often than I feel like it should. Again, this video was part of a longer interview video that we had, and I will post links to the other segments as well as the full video in the description below, and you can check those out as well. But I hope that this was helpful, and I hope that it helps bring you peace of mind when it comes to your tax and financial responsibilities. Thanks for watching.